To start this video off, I wanted to go over kind of like how I'm increasing my Oscar positions day by day, and then go over like a full overview. Yes, this is AI. I basically told AI to put this together for me as I gave it information so I can give it to you guys in a clear and easy way for you to understand the risks and reward for Oscar, because there's always risk involved with any investment, and I don't want you guys to panic sell, if it continuously goes down. So as we can see, I bought some a while ago right here, kept buying, and then recently it went down to 15, bought some more, and then just as you can see, it keeps going down. I keep buying more. I missed the little drop it had earlier today at $12.50, but that's okay. Right now, I'm currently down $4,000 on this investment, which I don't know if it's not even that much money, but for some reason, when my portfolio is down, I just don't seem to care at all. And I get really giddy and excited because it keeps going down, and I'm like, I can just keep buying more of the company that I want. Now here I have 4,200 shares, probably going to take this to 10,000 as it keeps going lower. And then on Robinhood, I have another 1,500 shares. This average is a little bit higher. Once this goes down to 12 or 11, if it does, I'm going to buy another probably 1,000 shares on here and move it to Vanguard. So it's all just in this portal. Now, to kind of go over what we're really betting on, if we look at it as a bet, Oscar as a whole, their revenue has been growing every single year tremendously. And this is a company that I found out about a year ago, just recently, a week ago, after telling my family about Oscar, stock and the company and what it does and everything about it. My older brother basically told me that his wife uses Oscar Health. And he didn't even know this. I was telling him about this company for a year, and he's like, "Are you talking about Oscar Health? Like the same health insurance company that we used when our son was born? Like something of that nature." I was like, "Yeah, Oscar Health. That's the company." And and I basically asked him questions. I was like, "Is it a good company? Do you enjoy using it?" Basically the typical give me a review on it. When I asked him, he said it was great, and he said his neighbor also uses it and they love it. So another kind of telltale sign that it's great. Now, with that being said, that doesn't mean there's no risk, right? We're still taking a risk regardless, but to kind of go over this right here, aggressive growth. When it IPO'd, obviously it was really high, went down all the way to single digits. Now that was because of two reasons. They were losing a ton of money, and I think in 2022 they were going to cut the ACA subsidies, and I think people got worried. They ended up extending it to December 31st, 2025, which is in about a month and a half, which is also what we're going to talk about in a bit. So again, aggressive growth. It's turned around. It's very, very close to being consistently profitable. Not every single quarter, but it seems like they're getting closer. And their members are continuously growing, which is a good telltale sign. Now, for me, I look at that and I'm like, once they flip to profitability, I think a lot of Wall Street and a lot of people are going to be like, well, now they're profitable, right? Health insurance companies they don't have the highest margins, right? If you look at UNH, if you look at all these other health insurance companies, they're not typically they're like 5-10%, if even 10%. They're lower than that. But once they hit profitability, 5-10% of 13 billion, which is what they're going to do this year, is not too bad, right? It's not too bad. Now, if we look at their market position, like we just talked about, they specialize in the individual ACA market, which is what we were talking about earlier of, is the government, are they going to pass subsidies moving forward for that? And if they do, amazing. Oscar is going to continuously get more members. If they don't, Oscar is going to have to increase insurance prices on everyone. And they might cancel their insurance policy, right? Like if we talk about like a 25-year-old or a 28-year-old, that's perfectly healthy, but they have, they're paying Oscar X amount, and they get rid of those subsidies. their insurance is going to go up double, right? And they might think, should I stay on this insurance policy? Probably not. I'm sure older people will, but younger people are probably just going to be like, I'm not going to pay double, right? So that's the risk with this company, is that yes, they're increasing their members, but if the subsidies if that goes away, a lot of members could cancel, right? So that's the risk that we're taking. Now, if we go down to the financials, which when we talk about their risk, really the risk is the company goes to zero. And do I think the company's going to go to zero, right? From a $3.5 billion, market cap, 12 billion in revenue? Probably not, right? It's not really realistic. If we look at their cash position, which is what I really look at, what's their kind of like fortress, like what's keeping them, if all goes to hell, what will keep them alive? They have 3 billion in cash, right? So their market cap alone is like 3.5 billion. They literally have as much cash as their market cap, and then $700 million in debt. So that's 2.3 billion, right, in net cash, basically, if you calculate it that way, which is, in my opinion, a pretty significant amount of cash, right, in comparison to a lot of other companies. A lot of other stocks, popular hype, tech, whatever stocks, this is flipped, right? A lot of them have 3 billion in debt and $700 million in cash. So if something goes wrong, they're really screwed, right? So they have a pretty strong cash position, which is good, which is what I like to look at for most companies. Now, one thing that I know that's worried a lot of people within this company is they say insiders are selling. This guy, Mario Schlosser, I think that's how you say his name, the CTO of Oscar Health. And when I really took a deep dive into it, I think it was him exercising some options, something for tax purposes. I didn't fully dig into it, but I don't think he was just selling the shares that he has. It was something to do with options. And then Joshua Kushner, again, we've spoke about this a lot, owner of Thrive Capital. He invests into pretty much most companies that you use if you live on this planet. He was early in Instagram, early in Stripe, early in OpenAI. Very, 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 very strong relationship with the people over at OpenAI. Just look into it on Twitter, look into it online. He bought, 15 million worth of Oscar last year at a $16, $15 price. So do I think he's just buying it for no reason? Probably not. He probably has some conviction in it, which is a good sign. But again, who really knows, right? In my eyes, it looks like he has some conviction in it. So it's a good sign for me. Now, shout out to Gemini for giving me the verdict. Is it a buy? Obviously, for me, I'm in it 59, so 60K plus another, 24, 25K if we adjust my cost. So I'm already in it like 75. I'm already in it like 85K. I'm going to continuously add to it as it goes down. The minimum investment I'm going to do in this is probably going to be about 100,000. As it keeps going lower, just keep adding to it and go from there. This is obviously a longer term investment for me. So for me, it's a buy. If we look at what Gemini is saying, again, balance sheet is strong. They have a lot of runway if stuff doesn't go their way, right? They have a long runway. So I'm not too worried about that. So if we see revenue growth, again, it is aggressive. Like every single year, it continuously goes up. 1 billion, 1.8, 3.9. It's practically doubling every single year. That's a good sign, right? And as we can see, very, very slightly profitable for 2024. And then if we look at quarterly, they're on pace to do, 12 point something, 13 billion in revenue. So every single year it's growing. Every single year. So if we go to like 2024 and whatnot, like last year, it's essentially the same price as it was over a year ago. If not, this is more than a year ago. So for me personally, this is almost 2 years ago, and revenue's going up. So for me personally, am I really too worried about it? Not really. If we really just base it to the risks and the rewards, I think the rewards outweigh the risks. I could get slapped in the fucking face in a month because I'm the one who chose to take the risk, right? So it's really up to me. Again, for this video, do as you wish. Feel free to not invest. Feel free to invest. It doesn't really matter to me, frankly. Like, I hope you guys can make some money off of it if it goes up. This is more of a longer term investment for me. Keep in mind, as everything is going down, it's not just Oscar that's going down. Every single stock practically is going down. Like, this stock that I made, money off of also went down, and I bought more, right? I ended up selling, as we can see, I bought 500 shares. This was October at 21, sold it at 24, made, a quick 2,000 something profit. This, I'm just going to continue to buy more, right? Like, the company is fine. I'm going to continue to buy more. It seems like it peaked at 28, which is insane. I ended up selling it like right here, but everything is down. So just keep that in mind. Every single essentially stock is down. And so all I'm doing right now is just buying what I like, what I think makes the most sense. Is there risks involved? Yes. Is there risks involved with most companies that you're buying? You could say yes. Like, there's going to be a risk involved with everything. There's never going to be no risk sort of thing. Even the S&P 500, that can go down as well too. Is it going to go down as much? No. But is it also going to go up as much? No. So you really have to understand your risk tolerance, your risk, kind of like how much you're willing to take, and make sure you're not emotional if it keeps going down, and you actually get happy when it goes down because you can buy more if you have the cash. I hope this was a good kind of clear understanding. Shout out to Gemini. I just threw it a bunch of data and it spit some stuff out for me so I can show you guys. If you guys enjoyed it, give it a big thumbs up. I hope you guys enjoyed it. If you guys need any help with investments, feel free to DM my Instagram. I've been helping a few people on the side with growing their portfolio. They've done great. I gave people this investment here. A lot of people sold it up here and a little bit lower, so they made great profit. So if you have trouble getting in and out of investments, or not knowing what to invest into, or not really understanding a lot of the fundamentals, I'm happy to help. So DM my Instagram if you need help, and thank you for watching. I'll see you guys for the next video. Peace.